In today's video, I'm going to be breaking down if it's a good time to buy railway stocks. These are stocks right now that don't seem to be getting talked a lot about, and I think that it could be a good potential into the future. So let's check these out right now. So the first one we're going to talk about is CNR, Canadian National Railway. It has an average volume of 1.2 million shares right now, and right now a dividend of around 1.7%. The PE ratio is a bit high when it comes to railway stocks in general. However, we're seeing that is basically a market-wide thing right now. Generally speaking, at least historically, I was many years ago looking at CNR and getting into it when it was around 19, or PE ratio was around 19 to 21. So 24 is a bit higher than it used to be. However, still very good potential, and I'm going to explain that very soon. Over the past 5 years, it's had a nice strong climb. Of course, the virus hit right there, and just like everything, it did drop back down, but it basically didn't drop any lower than roughly around $100, which is where that low point was a few years earlier. Since then, it has been on a tear. It's been having a pretty solid climb, and it's basically trading essentially within a range right now. It's in the middle of that range, so obviously it could go up or down, but I'm going to explain why I think that it's going to continue to go higher. When it does come to their dividend, they have been increasing it substantially over the last couple of years. They do pay it every quarter, and we can see that their revenue never really took a massive hit. They did take a little bit of a hit back in 2020. However, their earnings versus revenue right now to before is a lot higher. We can see that their revenue from before the pandemic is still lower, but their earnings are higher. So they are essentially making more money by doing less, which is obviously always a fantastic thing. CP Rail is another fantastic company, Canadian Pacific Railways, CP, on the stock market. It's got a lot lower of a dividend of 0.75%, but the average volume is around the same, and the PE is around the same as well. They are no longer technically trading within a range. We can see that they've broken out of that range and basically trading sideways at this point in time. So because of that, it will be interesting if they can break above that level right there. And they also didn't take a massive hit during the virus either, or at least at the peak of the virus. They've also been raising dividends too, which is always a good thing to see. Their revenue is also growing versus CNR's revenue not growing as much from before the virus. However, when we look at the actual earnings, we can see that they are making a ton more money. And I kind of predicted this last year and the year before. Because my prediction is most of these companies, whether it's a bank, a railway, or even a tech company, they're going to be cutting back on their staff because they obviously don't want to have as much staff on when there's a recession. And whenever that happens, if they can still get the same amount of work done with less staff, they're making more money, which means that they will have higher earnings once the recession is over. That's generally what happens across all sectors. Now, I've seen this coming, and we see this happening right now with many different companies, and obviously this is one factor into why it's right now maybe a good decision to get into the railway stocks. However, there is one more issue, and that is if the governments, and that's a big if because none of them seem to be wanting to move in this direction, but the big if is if they open up mining operations for oil, then right now there's not enough pipelines around North America to be able to ship this oil. What happens then? Well, basically what happens is what was happening before. And that was that CNR and CP, more so towards the CNR route, were shipping oil through the trains. And while this is a fantastic way of being able to ship crude oil, there is some issues with it versus pipelines, which is the part that confuses me. And that is there's a lot of environmentalists who are okay with oil being shipped on trains versus being shipped on pipelines, but pipelines fail a lot less than trains derailing, and we had a massive issue many years ago where it seemed like every month, which is why I got out of the train stocks many years ago, it seemed like every month there was a new big disastrous spill when it came to oil on the trains, trains derailing and things like that. And that tends to happen a lot more with trains than it does with pipelines. But there's not enough pipelines, and that means that if they start pumping more oil, the trains are going to be the ones that take it. And if that's the case, then the trains are going to be making more money. And of course, there is that whole idea behind grains being shipped, and there used to be a massive backfill, or however which way you want to say it. There was too much grain to be able to ship by trains, and they couldn't get it out of the middle prairies. So of course, there is still that happening too, where we need these grains to be able to make fuel, and obviously we use grains to make fuel these days because that's just the more green we go. And we also eat grains, and we need to have this stuff in our lives. So trains are going to be here for a very long time, and we can see what's happening over in the war right now, that trains are very, very vital to, of course, our society and our nation. So these seem to be very solid for the future. I hope that you've enjoyed today's video. Remember to do your own research. Don't just trust a random person online. I'm looking to get back into CNR stock myself because I kind of see that the direction where this world is starting to go. And I have been out of it for a few years now. I hope that you've enjoyed. I'll see you guys again in my next video.